Good evening, people. Welcome back to another live stream. It's the 20th of November 2025. The time is 8 p.m. UTC. It's good to be back on the streams. It's been a while. My last one was back in October. And on that stream, we talked about the possible downside risks. Unfortunately, that's come to fruition. But before we proceed ahead, if you can just give me a quick audio check and that you can see my screen in the chat, please. And we shall go ahead and continue with today's session. Fascinating day in the market. We've seen all the major indices sell off, from the SPX, the Nasdaq, to the Nikkei. Dollar showing a bid. Bitcoin obviously rolling over. Bitcoin has been showing relative weakness for many weeks now, whilst equities was trading higher. Despite the fact that many participants of the market thought Bitcoin was lagging and it will eventually catch up to equities, that was unfortunately not to be the case. I remember the last time we saw such a lag was November 2021, when Bitcoin was rolling over and equities were trading higher into January 2022. And then eventually that kind of signaled the top of the market, top of the cycle for that period. All right, great. Audio all good. Screen resolution good. And I'm also being joined by Jonathan, who's a market analyst at PrimeXBT. I'll be bringing him on the stream very shortly. But as always, a special thank you to PrimeXBT for partnering with me for these streams. Anything said in today's video is not financial advice. It's just my view of the market. It's for educational purposes. And hopefully, as I've always done over the last several years, I've been streaming since September 2020, just to share my views of the market from a high time frame perspective, keeping it very simple, looking at microstructure, macrostructure, high time frame levels where I wish to do business from a swing perspective. Obviously, in my own style, I also trade intraday as well, but that's generally something that I cover on my private mentorship, or it's not a paid group. I was running a mentorship starting in March of 2025. You know, it was primarily charity based. And I've had a lot of people asking me, "Hey X, are you continuing with the mentorship? Are you looking for are there any places available?" The good news is yes, there will be places or spots opening on that, and I will potentially be running that from taking on new members from December through to the end of Q1, and then that's it. We'll call it a day there. But like I said, that's not a paid group. It's probably going to be in partnership with Prime moving forward. So details of that will be coming out on the next stream. So I should be hopefully streaming again in a week's time, and looking to bring on a special guest, which I think you all know who that is in due course. We'll keep it as a surprise now. But before we proceed further, if I can just get Jonathan, are you there to join us?
Yep, I'm here doing a little mic check.
Yeah, good stuff. And audience, if you can just confirm that you can all hear Jonathan's voice in the chat, give us a thumbs up and we'll kick off on today's stream. So whilst I'm just waiting for the chat to confirm that, what do we think? Do we think the top is in, or is it just a correction before we see 150k? Let me see some comments in the chat. Or where do you think we're going next over the next 3 months? Year end, where do we end? Do we think 150 is on the cards before the end of December? Or do we think we're eventually heading lower? Correction, interesting. All right, I'm just going to kick off the stream here. Jonathan, I think they can all hear okay. Thank you for joining us. How have you been? How's your day been?
Oh, I'm great. Interesting, definitely interesting. I mean, we started with the S&P 500 recovering quite nicely, and then I went to have dinner.
Amazing.
Looked at the charts, and I'm like, wait, we teleported straight down to new lows. Yeah, it's a very, very interesting days in the market, and I'm sure we're gonna have a lot to talk about here today.
Yeah. Awesome. And it was really good catching up with you. You've been in the markets as long as I have. 9 years now, isn't it? Coming to your 10th year in trading. But what markets do you generally specialize in? What's your primary markets, where you generally do the bulk of your trading, let's say?
Well, so yeah, that's right. I'm coming up to 9 to 10 years now in the markets, and I'm specialized in crypto and Forex. I would say I trade Forex more than crypto, but my heart is in crypto. I mean, once you go into into crypto and you experience bull runs like we had in 2017, there's no going back. Like you can never go back from a market like that. So I'm always going to be trading Bitcoin and altcoin. But Forex is where I'm trading mostly. That's where I'm making most of my money. Bitcoin, I'm looking at Bitcoin for more of a high time frame, long term perspective, for a more investment type of approach. But that's I guess that's the two main markets I'm looking at.
Yeah, great stuff, great stuff. So I guess you're primarily more of a high time frame swing trader, is that correct? As opposed to somebody who trades day to day, intraday, scalping. I guess you're looking to trade around the high time frame levels. Correct me if I'm wrong.
Yeah, so I'm predominantly a technical analyst. I would say that's my expertise. While I am, interested in fundamental analysis, I try to get an idea of the macro landscape, but it's not. I'm more going through the markets, looking at analysts' notes and things like that, and trying to get my view on that. But where I spend most of my time is in technical analysis, and I do. I'm a swing trader, and I'm focused on the primary trend, right? So if you're looking at Bitcoin right now, we can definitely say that we are on the weekly creating higher highs and higher lows. So that's the trend that I want to be part of. I'm mostly looking at the daily time frame, because I think everything below the daily is basically noise. You're going to get stopped out a lot. You're going to get a lot of choppy movement, but the daily is clean, it's easy, it's relaxing. So yeah, that fits well with my personality. So that's that's kind of like explains my style.
I think what we'll do, no, brilliant. Thank you for that, Jonathan. I think what we'll do for today's stream, hopefully we'll try to keep it under 50 minutes and really focus on the core technical levels. What we plan to do is kick off with the dollar index, and we'll also have a look at SPX, the Nasdaq, and the Nikkei, because I think when I quickly have it, I've just got my screen up, Jonathan, and when I have a look at those charts, to me, I do feel as though there is a shift in the overall regime or market regime. Here we've got a chart of the SPX, right? And what I'm starting to question is that when you look at the charts here for the first time, just bear with me a second. When I look at the charts for the first time, not just the weekly trend. The weekly trend is fine. We've got a level of support here at 6,500s, but it's more so the daily where I'm just starting to be under the opinion that we may see more of a sideways corrective market, because we've had an extensive rally. We had the Trump tariffs, debacle, the market selling off in February, shallow rally in March before the bigger sell-off. But once we reclaimed this key 5,500 level, the market has been on a relentless rally from the lows for the next, for the best part of 6 months. But, for the first time since the lows of May, the market is starting to show signs of weakness, where now it's a question of, well, look, what's positioning telling us? Is the market likely to remain weak for the next 2, 3, 4 weeks ahead, heading into December? Are we likely to see more of a correction down into this key 6,400 level before we can probably think of a rally later, in December? It remains to be seen. And I think it's not just the Nasdaq, it's not just the SPX. When I look at the Nasdaq as well, it's the same over there. The NQ is rolling over. Again, this 2,500 level has been key for me, but not just the Nasdaq, the Nikkei as well. I don't know where it is, but every Thursday for the last few weeks, Bitcoin has sold off. And I don't know if people have picked up on that. My good friend Tom Capital has highlighted that, and he's talked about that on his timeline, that Bitcoin has a tendency to sell off. If there's weakness, then it generally sells off on Thursday. And I'm kind of kicking myself that I didn't take advantage of that today, because I've caught the other moves down on Bitcoin, but not so much today. I was kind of distracted elsewhere. But again, when you look at the Nikkei here, it's we're seeing signs of the market eventually going this extensive rally all the way from the lows in April to current day, where we're seeing consolidation now between the 1221 bands. And if anybody who's been following me for quite some time, I use a variation of the 1221s or the 1225s. Obviously, the 1221 being slightly faster. So there are, for me, I wouldn't call it concerns in the market because obviously we've had quite an extensive rally. It's just the reality is that there is likely to be a corrective move down. And I think the one thing that you're probably going to start seeing now is calls for a recession or extended bear market. And I think it's too early to jump into that type of narrative. And at the end of the day, even if it is a bear market, even if there is, the R word being thrown around, all that matters is how are you going to action that when it comes to trading, when you look to buying levels, when you look to invest, when you look to trade. And at the end of the day, I've been down the macro rabbit hole. I did very well using the macroecon data in 2021, 2022. Kind of fell off the sideway a little bit in 2023. Perhaps became overly defensive at the lows, but then again, I shorted it from all the way from the highs. But you learn. And I think you've got to find a balance between, what the charts tell you versus kind of the news out there. And the two ways to really think about markets is that markets are either going to be event-driven or structural. And I just get the impression that what we saw on the 10th of October with Bitcoin was pretty much event-driven. Okay, we had an extensive sell-off, big, huge liquidation, and then gradually this whole entire move has been fairly structured, very controlled selling. Obviously, there's a reason of more sellers than buyers currently in the market. But at the end of the day, I think when you really objectively look at the market and you look at where Bitcoin was in March, down at 75, it really has been up only into 125. So, from taking it from 75 to 125 without any real significant correction, this really doesn't come as a surprise. And I think there's a fractal or a schematic that I've been sharing on the timeline and in the Substack group as well. And I've been covering that for the last 2-3 months that I had my concerns that, look, please don't get too carried away. You've got to start thinking about risks to the downside, because looking at this from a range perspective, the fact that we've, the chart that I shared from last year was we were around about this level and my projected levels were 125s. Now, I didn't know that the market was A, going to get there, or B, was going to reject from there, but it's always a point of interest. But what really gave me reasoning to become defensive was looking at the order flow and looking at really, there's a lot of buying effort up at the highs. Some of it was induced by shorts being forced to close early, therefore becoming aggressive buyers. But the market found resistance. And ever since we saw the liquidation event occur on the 10th of October. Now, if you go back to my last stream, the very last public stream that I did, one of the key levels that I talked about in depth and with logical reasoning was this 116 level, because this 1 hour or 4 hour candle was the origin of the move down for the liquidation event. Because I remember this 116 being a key zone in terms of the composite value area low. But like I said, once we had the liquidation event, where did price come to? It came back to the origin. And that for me is what was capping the market. And for that reason, I've been looking to sell the market, which I think I've done a very good job of. Unfortunately, I failed to capture this last leg down from 98s down to current day valuation I've not really caught. So I just want to give a bit of context about what I'm looking at from the high time frame markets, and really when I'm seeing price action here across all markets, I don't think there's a need to really rush into knife catching this. As a trader, it's easy to get carried away, but you've got to respect the momentum and you've got to respect the trend. Could this be a local bottom? Absolutely, it could be. But the one thing I will tell you, and from my own experience, is that when you're trying to knife catch these bottoms, you're going to piss away a lot of money. And by the time price eventually bottoms, one or two things are going to happen. You're either going to get a sharp V reversal, which is a mean reversion, which for me is the far easier trade to take from a selling perspective, because if we get a mean reversion to 97, 98, that for me is a far easier trade to take. Now, I will admit that I have had a couple of attempts at logging the market. 1 or 2 have worked out, short term, intraday, 1 or 2 have run me over as well. So pretty much all the effort for not much gain. But the one aspect that I was going to talk about is that you're either going to get a review reversal, but what would be better in terms of price going higher is more of a structural bottoming process that takes a good month or 2 or a good several weeks. Because once you build that base, that really gives you something to propel from continuously higher, where you get every corrective pullback then is a higher low into another higher high, versus if this just V reverts back up, I think there's a very good chance that you can become a seller of this, looking for price to come back down. Whether it's a higher low, whether it's a lower low, remains to be seen. But I just wanted to quickly give a TLDR of my thoughts of the markets before I bring Jonathan on board. And Jonathan, I'm just going to bring your screen up now. Why don't you take it away from everything that I said? Why don't you tell us what you're looking at when it comes to the market? Preferably, we'll start off with Bitcoin.
Right.
If you just want to minimize,
first of all,
sorry, if you just want to minimize your watch list as well.
Yeah,
please.
the watch list.
Yeah, cheers, thank you.
Sorry. No, so first of all, love the analysis. I'm absolutely in agreement with that. So the first thing I kind of want to bring your attention to is the fact that if you look at the trend that we are in currently right now on Bitcoin, I'm looking at the log scale right here. So for those of you who don't know, the difference between the arithmetic scale and the log scale is that when you're looking at the higher time frames, it's easier to get a complete picture of the trend when you're using the log scale, because the moves are normalized by percentage moves and not the dollar value. You can easily demonstrate that by just adding that percentage tool and moving it up, and you see that the percentage of this tool never changes, but the dollar amount does, and it's going to be reversed when you deactivate the log scale, and you can see the difference here. So when I'm looking at the higher time frames and the longer time frame moves, I want to activate the log scale to get a feeling for the power of the current move. And we can very clearly see here that we had one impulse. I'm not trading elite waves, but I'm using the word impulse move because I think that kind of makes sense in this move. So we get that first bottoming action right here, kind of break structure here, and then another strong push to the upside. Another strong, but this one you're obviously seeing some exhaustion here in the uptrend, where you're weakening out, bottoming out, or topping out here in a range, breaking down. But if we look at this from a buying the dip opportunity, we can see that this move to the downside, 32.82%, 39.93% on the second one, and now 31.96%. So this dip from the top to where we are currently is almost exactly the same amount in percentage from that top to this bottom. So what's really the issue here? You know, if you look at this from a long-term high time frame perspective, what you want to see for this to really be a confirmed downtrend, obviously you want to take out these lows, or at least come up and create a lower high first, and then maybe a double bottom that could perhaps break down. But looking at Bitcoin here from the higher time frames and zooming out, to me, it would be, I mean, honestly, stupid of me not to look for buying opportunities here, because we are in a bull trend, an uptrend, and we're hitting a support level. Yes, we have erased, all of 2025 gains. That sucks, but still, we're at a level where if you're bullish on Bitcoin for the next 6 to 12 months, then not buying here because of fear of more downside, then you're not really investing, are you? You're just thinking, you're just emotional, right? So from a strictly technical point of view, I'm loving this level. Now, if we zoom in, as someone who's trading on the daily time frame, I'm never really going to be catching a knife, because I'm always going to be looking for a daily candle to close and give me some kind of confirmation. And I love what you said about a V reversal might just come up, hit resistance, and that's going to be a good selling opportunity. But if we build the base, which if I'm looking for a base down here, because I think that if we build the base here and sentiment in the market returns to bullish in the next few days or week, it might not look like a great base on the daily, but that's when I use the 4-hour. So if we can see some type of base being built here, maybe first reclaim that level, right? Maybe create a range. We got the range EQ here, trading a little bit and peaking above the range high. And we get that on the 4-hour. And then maybe we have a multi-candle reversal pattern, which might look like, a bullish candle here, and then a big bullish candle engulfing that one as a bullish engulfing. That might be my signal to enter. And then the fact that we're in the Fibonacci zone between the 0.618 and the 0.786, what I call the reload zone, but it's just a name, doesn't matter. These are the fib numbers. That zone is historically in all markets, basically all markets. You can look it up yourself on the higher timeframes. It's a very good area where you usually have great buying opportunities in bull markets. So yeah, I'm bullish on this, even though I'm cautiously bullish.
Yeah, it's a fair point. I think for me, as somebody who's been very defensive since the highs, like I said, I've been shorting the market consistently. I've had a really good 4, 5, 6 weeks. I think I tweeted earlier in the week that I think the easy shorts are over now. Obviously, I've missed this last leg down. It's fine. I'm not going to catch every move. The main thing is I'm not losing money. But when I look at the markets here, I think technically, give or take, I'm not sure where we're going to find support. And my job as a trader is not try to guess where support is going to be. I'm going to let the market show me where buyers are willing to step in, or where sellers are becoming aggressive. Because one of the key things that I talk about is when it comes to trading markets, I'm just going to bring my screen up for a second, Jonathan. When it comes to trading markets, what you really have to think about is if you have, some key level here. Sorry, let me just do that again. If you have some key level, essentially what I'm looking for is that, look, price often comes down into a zone, okay? And you get a low time frame swing fill. Buyers start piling in, okay? They start lifting the offers. But above, higher up, there are some stacked passive asks. And these could be your larger players, commercial players, who are looking to sell at the market, okay? So they're waiting for their bids to get filled. And for all this aggressive buying, lifting of the offers, if they can't push price higher, but, the larger entities at play are absorbing all that aggressive buying. And don't forget, you've also got people who may have shorted the bottom, right? So they also are going to become forced buyers, because what happens when you open a short and you have to close out your position? You're essentially becoming a buyer. But what happens when your stop gets triggered or you get liquidated? Okay, you are becoming a forced buyer. And so what I'm really looking for is if there is a large aggression of buying, but the market can't seem to push any higher, then it's very likely that the minute this starts coming down, well, whoever was long from, say, this level, and whoever's long from this level, well, he's got his stop there, and he's probably got his stop there, okay? And so that's what gives you that cascading effect, that when these large passive players who are looking to get their orders filled, and just if price only trades halfway into this zone, and then starts breaking down, what do you think the players in the market, the participants, are going to do who never got their orders filled? They're going to chase down, aren't they? So then they place their limit orders at the next level, okay? And therefore, any bounces are just being absorbed by passive sellers, the large sellers. And again, when price pushes lower down, what would you do? You just assume you've long the market over here. You're now offside. You're probably going to be very hesitant to hold that position, so therefore you're going to close, and that adds further selling pressure. And that's what I've seen happen during this downtrend, where buyers are stepping into the market. Okay, a lot of effort has gone into buying. It hits resistance or local resistance, and it just rolls over. And that rolling over has primarily been fueled by aggressive buyers who are then flipping out of their positions or getting liquidated on the move down. Also combined with the fact that there's a lot of selling in the market as well from a spot perspective. And then obviously you've got participants who are looking to sell on perpetuals or futures as well. So really it has been a seller's market for the last several weeks. But having said that, what I'm now looking for, and I think what I'm starting to see signs of, is that there's a lot of aggressive selling coming in just a short while ago at these lows. And what does that mean? It's where you've got a large number of sellers, high volume of selling, but really price couldn't push much further lower down. Price rallies slightly, and then it comes back down again for a real effort, but it's been absorbed. So that clearly then tells me that there's a level of interest here in the market that, in terms of passive bids, they're absorbing all this effort, and for all that selling in the market can't seem to go lower down. If I just bring up XO charts, actually, I might just have that over here on this image, just to demonstrate to you what I've been seeing for the last few hours. So here is the footprint chart. I'm just going to change the tick setting to, say, let's just go with 1,000, okay? Now, if you look at what I've just said, in terms of price, if you look at the volume that's being transacted, okay, so here we go. Here's an example of this. So you've got the VWAP band. You've seen a level of aggressive buying above the VWAP, but look at how the candle closed, okay? And when you look at the delta as well, There's your delta. It's positive. But yet price has pushed up, but it's closed red. So what does that tell you? For all that aggression in buying, the market wasn't able to push higher. And what happens again subsequently? We see a lot of positive delta in the market. But again, why is this not closing up? Because it's been absorbed by sellers, passive sellers in the market who are in control of the move down. Okay, and so what happens then? If you've essentially longed this, and you're longing this, and then look at where price closes. The next candle, it barely trades up, and it starts trading lower down. So all this position now becomes unwound, and that's where you get this aggressive selling. It's a combination of positions opening and for sellers entering the market. Now, let's just fast forward ahead. What's the point that I'm trying to make? So look, you can see that pattern continuing. Buyers are trying to step into the market, price trades lower down, but here's where I'm starting to see a shift. Because if you look at the momentum and if you look at the effort, we've had minus 35, 45, 68, 43, 41, 46, minus 22. That is a lot of selling. Yet for all that selling, why has price only traded a few $100s? Okay, that's the first sign that I look at the market. And even when you look at the delta, look at the volume. We've had, in terms of the candle, we've had $3.85 billion worth of volume, and the delta is heavily red. Minus 207 of net selling in this candle, okay? 60-minute candles. And the next one, 294. The one after that, again, more further negative delta. A lot of aggressive selling, yet price is being capped at this level. Why are we not breaking down? For all this effort, there's no gain, okay? So this is the very first shift that I'm looking to see in the market, to think, all right, you know what? I think sellers are starting to become exhausted here. So is this the slowdown in momentum that I need to see to start contemplating about thinking about longs for at least a mean reversion back up to 90K? Because at the end of the day, if this level is to hold, you know, and let's just assume that this isn't the low of the day, let's just assume that for whatever reason, price comes back in, sellers come back in very, very heavy. So again, we see large selling at these lows, but price closes back above. That for me now is starting to signal a potential shift that the market could reverse from this point. But obviously where that idea becomes invalidated, and I'm not looking at the market to think, okay, I'm going to hit a long now. I'm just trying to identify signs of a shift in momentum. And if you look at the delta, it's when I just zoom out the charts, you can see, just looking at the delta here, sellers have been in control all the way down. Red, a bit of blue, okay? Kind of mark the top. So again, for all that aggressive buying, well, they've got trapped. And what's the market done? Trades back under the VWAP bands. Trapped buyers who are looking to long the market here with a combination of shorts being squeezed out, and the market sells off. But now for all this heavy selling that we're seeing at the lows, is this the first signs of seller exhaustion? Remains to be seen. But again, that's kind of one way that I look at identifying whether I'd be interested in long in the market, or whether I'm just waiting for further confirmation to see seller exhaustion. So if there is another push down, are sellers able to take control and take it down into 85s? Or is that the deviation where we get a push down, price reclaims back above there? That for me is now, okay, I'm going to start chipping away, pull back, another rally, I'll add to my bids, and then look for profit into the mean reversion of 90K. So that's kind of how I look at the markets from an intraday perspective. Sorry to kind of ramble on there, Jonathan. I just wanted to give an insight as to what I'm seeing when it comes to the flow and the footprints. But just bringing back to yourself as well, I think one of the, on the high time frame level, if we just look at your chart, correct me if I'm wrong, what's the moving average that you're using here, and on the weekly basis?
So I was looking at the 100 EMA. So looking at from a statistical point of view, obviously, you know, in technical analysis, what we're trying to do, we're trying to look at price history and then look at patterns and not expecting, but you know, viewing the markets as we would view the weather as a weather forecaster. But there's not a lot of statistics on this. But this is the 100 EMA, and basically what I tried to ask myself is, do we have any exponential moving average or simple moving average as well that kind of was the last line of defense before breaking down completely in past bull markets, where we, you know, mark the entry of a bear market. And of course, we're looking at 2017 and 18. I mean, not really sure if this is we can use this because we've already dropped 70% here. But you can see at that level when we broke down completely, we went all the way from 6K to, man, I remember that, all the way down to 3K, I believe.
Yeah, that was painful.
And that was
painful.
when, yeah, that was insane. That was crazy. I thought, honestly, down here that it was over. It was over. I honestly thought that, yeah, there's not going to be a new high. Bitcoin, crypto, it's over. And then of course you start thinking that, and we have that. But that's so that's the 100 EMA, and I like the way we're hitting that level right now. But does it make sense? I don't know. It's just an interesting observation that I'm watching here. I just want to go back to, you looked at order flow, and I must say I think that's incredibly impressive. And for those of you watching right now, I think you want to learn that, and I'm going to go into your mentorship and I'll have you teach me that, because I feel like, you know, we got price, everyone's watching price, and then we have indicators based on price. But volume is very underrated, because volume is that second layer that we're not seeing in price. But if you can learn how to combine price and volume, you have a significant edge over other market participants. So that's definitely something I'm going to be, when I'm done with my CMT studies, definitely that's going to be my next thing that I dive into.
For me, volume has always played a large part, but I think, again, order flow isn't some magic formula. It's not going to give you a massive edge. I think order flow just kind of helps you read the microstructure in the market. So if you want to get really nuanced and figure out what's actually happening at level, as opposed to some ICT order block guru wizard who's going to tell you there's a liquidity grab under this low, but that when price takes that low, why does it roll over thereafter? It's well, number one, it probably wasn't a liquidity grab, but number two, it's really about understanding the flows. So and I think that's what, you know, people think order flow is complex. It's not. It's just looking at the volume transacted at a given level, and there's various ways you can use various volume metrics. There's fixed range volume profiles, there's periodic volume profiles, there's session volume profiles, there's footprint charts, you know, you've got your VPVR as well. So for me, it's just a nice way to measure the amount of effort in the market at a given level. That's what order flow essentially is, because what moves the markets, when you trade, when you execute a trade, you're adding to that volume for that given session, whether it's net positive or net negative. That's the delta, okay? So it's really trying to ascertain who's actually in control of the market here and what are the flows telling you. But really where I use order flow is at those key inflection points, okay? So when price comes into a level, going back to my olden days of 2019, 2020 Trader XO, here's a demand zone. I have no idea if it's going to stick or if it's going to give me a reason to go long and short. But at the end of the day, what I've tried to do is incorporate order flow into my trading of futures markets, not so much altcoins, but more futures markets, just to give me that slight 51% understanding of reasoning that, okay, I think I have more reasoning now to actually execute a trade. And it's not just about trade execution. Sometimes it's also using it on the inverse of that, reasons to get out of the market. If I see aggressive selling in the market and I'm long, because I took a loss earlier in the week on Bitcoin, I long 94s and I cut my trade at 93.7s. Why did I do that? Because I could see that for all the aggressive buying, price wasn't going nowhere. Or when price rolled over with traders then unwinding their position, so basically longs were closing out, which is fueling the move lower down. That tells me this is really weak. I have to get out the trade. Subsequently, price traded down into 91s and 90K, and then obviously thereafter the rest is history, really. So, but I'm
not sure if you're supposed to. Sorry, but I'm not supposed to. Are you supposed to sharing your screen? Because we're getting a lot of comments on saying that they can't see your screen. But I'm not sure.
I was just talking basically high level from my thoughts. But I agree. I think this level is honestly this is probably the first level that I've really been interested in from a, let's just call it a swing trade perspective. And like I said, I'm not rushing into the market. I think I'm just going to let the market settle. We probably will see an aggressive bounce for a good $2,000-3,000 higher. That's going to be a combination of longs chasing, but shorts closing out as well. So that's what generally drives these sharp V reversals, is when late shorts are piling in or shorts are covering. If anybody's been short from 98, 95s, or even 90k or 89, then I'm sure they're going to be looking to take profit, and that kind of adds fuel to those sharp bounces that you normally get in a bear market. Well, not I wouldn't call this a bear market, but in a downtrend, let's just retract from that. I don't classify this as a bear market. I think it's too early to even call it a bear market, and by the time bear market's in, we're probably closer to the lows than we are to the highs anyway. So it's just a really bad way of framing markets. What I really think about is price up value, and I think short term, in terms of, like I said, I've been selling the market for 6 weeks. I look at the market now, and I think, there's a lot of fear. There's a lot of fear and sentiment, in terms of the timeline. That is the top is in. Is that it for this cycle? Are we now heading into a bear market? And that's fine. People are going to speculate, but at the end of the day, as a trader, I'm looking for opportunities to trade this market. And the zone that we're in now, this 80s zone, is of interest. But the key thing that you have to remember, just because I'm interested in this zone doesn't mean I have to do business. Sometimes part of being a good trader is recognizing that, all right, here's a trade setup that I've got planned, but you don't have a reason to take the trade. That is part of being a trader. Just because you've mapped a trade out doesn't mean you have to take it, because if the conditions aren't aligning and you don't see the reason that you need to see to execute the trade, then don't take it. It's as simple as that, okay? But the whole point of what I just said there is that you have to understand your own process. You have to understand your strategy. You have to see the conditions of a trade setup that give you reasoning, as opposed to, I think we're going to bounce here, because that's not good enough sometimes, okay? You've really got to understand your process and strategy and have a playbook and understand where your edge lies in this game if you really want to make it. So I think we probably both align here, Jonathan, that this is probably in here somewhere. There's going to be a good level to bid. I just don't know where yet, in all honesty. But like I've explained, I'm just waiting to see signs of seller exhaustion. Maybe we see one more liquidation move down. Maybe we go all the way to 75k. I really couldn't tell you at this point, so I don't really have any. I don't have a horse in this race, so to speak.
Would you? But would you? Yeah. So would you be interested in buying at 75? Because that I have a problem with. You're looking at the behavior of the trend, right? You get up move, retrace, up move, retrace, up move, and then what happens if you come down here? Is that a retrace that you would be buying, or is that that's? Yes, it's a good level. It's very close to invalidation, because we're basically going to say, okay, what if we just draw a box, something like this, and then we would say, okay, this is a good level, and then what's invalidation? Well, invalidation would be a lower low, like breaking below that one, going below this zone. But I also feel like the best trends are the trends where the retraces are no longer then or no further down that maybe the 0.786 of that level, because when you go down and you create a double bottom, you create a different structure, right? So you might end up in a range, or there's going to be much more bullish momentum required to even come up and test that high. So I'm not even sure. I think I'm more of a buyer here than I am a buyer here. I would need much more confirmation and conviction to buy down here, because honestly, if Bitcoin drops another 11-12%, I'm going to be thinking about Bitcoin as potentially being a leading indicator of sentiment in the market. And then I have to look at the macro regime. Like right now, I believe we are in Goldilocks conditions. We have a strong US market, job markets are relatively strong, but there's a lot of potential of liquidity easing in the markets, and there's a lot of signs that something might be breaking where we're going to enter a true bear market. And the closer we get to this level, the closer the risk and the chance of a true bear market. So if we had a question, is this a good time to be a dollar cost average or start the dollar cost average strategy? I mean, if you're bullish on Bitcoin and you're in a bullish market regime, it's always a good time to be dollar cost averaging. But if you are doing so from a level to level basis, I honestly think this is a really good level. Now, no financial advice, of course, but for me personally, these are the levels where I'm going in heavy on trades like this. So if I have a swing trade, I'm going to be watching this. I'm going to not have a stop loss on my position trades or my swing trades, but I'm going to look at this as my mental stop. And then I'm basically going to look at, okay, so where can we go? 150. That would kind of be in line with the trend. So even at these levels, that's a 5-hour trade from a investment point of view. If I'm risking a significant part of my portfolio here that I'm willing to risk on Bitcoin long term, above 5 hour, to me that's extremely good risk to reward. So I like this.
Yeah, and I think what really matters here is the styles that you and I have. They vary. You know, for me, I can say the 80s is a good buy, and all I'm looking to take it into is a lower high. And for me, where that lower high is will ascertain my overall view of the market. So I've explained kind of what I'm looking for. If it's a V reverse up into 80, 97s, 98s, 100, wherever resistance is formed, if it's a short reversal, then I will be looking to sell that. So I don't really view the markets from a point of view where this is bullish or this is bearish. I just think, look, 6, 7, 8 weeks ago when everybody was bullish at the highs, I was very, very cautious. Now sentiment is pretty shit. Let's be honest, it's flat on its arse. And I don't even care because I'm looking at the market and think, all right, where can I find a good opportunity to long from? Because I do believe there's going to be a long in here somewhere. And equally, if the market bounces and finds a resistance, I'll then be thinking, all right, I'm looking for a good sell opportunity. That does not make me bullish or bearish. I think where my definition, and I've just come back to my screen, here's what I'm looking at, in all honesty. When I look at the market here, and when I go to Bitcoin on the high time frame view, the first thing that I want to point out, and this is where, for the viewers who are watching, this is how I shift context. Okay, so when I go to every time frame to the weekly, we've just crossed over on the 1221 EMA. Sorry, bear with me a second. We've just crossed over on the 1221 EMA. Now, just because we've crossed over doesn't mean, all right, it's time to be bearish, because you have to remember, moving averages are just a derivative of price. But what's fascinating to me in this instance, which we've not seen happen this cycle, is that every time price is traded below the 1221, it's been a very shallow basing of price, just hovering below the 1221 as far back as October 2023. And then the next time after that, again, what does price do? We start trading below the 1221 bands. But the key thing here to really take note of is the trajectory of the bands. It's not like they're rolling over. They're just trading sideways, okay? This to me, and I talked about this in detail in 2024, many analysts assumed that this is it. This is the high in Bitcoin because there's a break in structure. We've got a high, we've got a higher low, but now we have a lower high into a lower low. Therefore, this is bearish because there's been a shift in microstructure. My argument is this shift of structure does not really matter in a range. You will absolutely get this wrong, because in a range, you're going to get periods of lower lows and lower highs, and then a higher high into a higher low. Then it shifts back into a lower high into a lower low. That is range-bound trading, okay? A range is that. It spends a large amount of time trading from support to resistance, resistance to support. It's that bracketed rotational environment, okay? And that's why when you look at the moving averages in this instance, they weren't at any point rolling over significantly. And the second thing that you really have to pay attention to here is that, all right, price is trading below the bands, okay, the 1221 weeklies, but has it really extended away from the bands? And there's a concept referred to as one-time framing. And one-time framing is what you see in a trending environment, where let's just assume this is any periodicity, right? This could be a 1 hour candle, a 4 hour candle, a daily candle, but this is one-time framing. And what you noticed with each candle, it's just a clean trend down, okay? At no point did price ever do this, where it pushes up and then it pushes down and then it pushes back up and then it pushes down again. That's not one-time framing, okay? That's just rotational price action. And so when you look at the context here, what do you see? You see that type of price action here. Pushes back up, trades back down, pushes back up. That's not a clearly defined trend. And then the same happened again in June 2025. What does price do? It breaks below the bands, okay? But again, we had the one expansive candle down. But was there any real continuation? No, there wasn't, okay? What does price do? It oscillates up, gravitates back down into a rounded retest of the lows. It was essentially a range-bound environment. What does price do? It hovers just below the bands. It's not expanding below, is it? This is the key difference that I see from these three instances to where we are today. So in this instance, where price has, again, look at the trajectory of the bands and the loss of momentum. Price is slowing down, as it did here. It's doing the same again. But in this instance, we got one expansion down, backfill, two expansion. And if you look at the current weekly candle that we have, okay, this is another reason why I've not really been looking for spot buying opportunities, because look at this weekly candle. We've barely backfilled the previous week's candle. This is a sign of weakness, and it's the same on the way up. When you see markets pushing up like this, expansion from this consolidation here, okay, that's the impulse up. But look at this candle, the next candle. It barely backfilled the previous week's candle, and then price consolidates. This week here opens up. Does it trade significantly lower down? No, it doesn't. It continues rallying, okay? So in these trending environments, you have to flow with the market in the right direction. Now, when I look at price here, this is another reason why I'm not just rushing into long short, because we are seeing that notion of one-time framing. If you go to the daily, you can see it very cleanly here. Lower low, lower highs, okay? And again, is any candle coming back up to take out the previous day's wick, or even a final acceptance above it? No, it isn't, okay? So until that happens, you know, there's two ways to really trade this. You can trade this aggressively, like I probably will do, or you can wait for the confirmation, which is let price come off its trend, push up, okay? Then back down. And what do you find? You then find that this momentum is now becoming a trend. Is coming out of a trend and developing some form of range. Whether this is compression before continuation lower down remains to be seen. Whether this is consolidation, okay, before we see a reversion back up, remains to be seen. But the point is that you're going to piss away less money waiting for this environment to then start framing your trades, knowing that instead of knife catching this all the way down, you can wait for a shift in environment, because there will eventually be a pullback. Then you can look for the breakout as a continuation play higher, okay? But if you're trying to swing trade this from here to the all-time highs, I think in this condition it's difficult. But good luck to you if you can pull it off. I'm not saying it's impossible, but I think just from a trading perspective, is that I know that after an extensive sell-off, one or two things are going to happen. It's either going to be a sharp reversal back into the bands. It'll probably come back lower down again, or we get a slightly deeper sell-off, consolidation, and then another continuation lower down. Then we build a base, okay, range-bound environment like that, and then we can start pushing up again. Or if we break down, then we have to go with that, and we're wrong on the idea. So I just really wanted to point those concepts up. But basically, going back to what I was talking about, that's the first real structural change that I've seen in the market. When you look at the weekly bands, when you look at the 12 and 21s, when you look at how markets generally sell off, there's an example of it. That one-time framing, there's barely any pullback on the previous weeks, straight through the bands. Look at that multi-week consolidation, okay? Same happened again, 1 week, 2 week, 3 week through the bands, consolidation, second leg down. That's your first leg down, consolidation, that's your second leg down. So I feel as though, like, if we are going to consolidate in this range, we're probably going to do something like this, okay? Or this, because look at the extension of the sell-off. And we saw that happen here again. We will probably see a good few weeks of rotational price action. And this is generally where I perform really well, looking to trade the range. Okay, these are really, really good ranges from previously we saw 75 to 88. That's a good 12, 13, 14K range. You can make some really good money on that if you structure your trades correctly and you play the extremities really well and flow with the lower time frame, directional trends on the lower time frames, okay? But as it stands now, I'm just telling you from experience that this is where you start pissing money away. Can it bounce from here? Yes, it could. But is it worth the risk? Just slow down a little bit is all I'm trying to say. So that's the weekly time frame. When I now go back into the daily is also telling me, hey, XO, you need to be careful because this is a fairly strong downtrend, okay? at no point has price ever really traded back above the band since 116s. Okay, there's a double rounded retest. Look at that sell-off. Caps price, I short. Caps price again, I'm short again, okay? This is where I've not really got latched onto a short from 98, so that's fine. Didn't catch the entire move down, that's okay. Did catch 125s down to 116s. Did catch 116s down to 107s, 107s to 98, and that's it. Now, when I look at the weekly and the daily, just think of these as a regime filter. Why do you want to fight the trend? Why do you want to be on the wrong side of the market? When the market is telling you that, hey, you know what? There's a big structural shift here. You don't really want to be flowing on the wrong side. Just equally how, where if you look back in back at April, May time, if you look at the weekly time frame there, this here confirmed. Don't fade the market, okay? And then when you drop into the daily, where I've marked that level, well, there's that. Look at the trend, okay? And then you get the consolidation as a range-bound environment. If you're looking for shorts, then this would have been it. And then potentially here, but obviously the market continued high because the overall regime of the market on a weekly basis, at no point did it ever roll over. The strength is to the upside. So this is where I think, and I'm going to use the word defensive, okay? I'm not going to use the word bearish or be cautious. I'm not going to doom post or doom talk. I think there's going to be good trading opportunities if you're a trader. If you're an investor, then I think it's a case of where just let the dust settle slightly, let the market find some structure, let it find some balance, okay? Because right now, this is an imbalance in the market. This is where sellers are in control, buyers are nowhere to be seen. Perhaps buying interest comes in lower down, perhaps it comes around here, but let the market show you where there's a level of buying interest to start then structuring a trade and start thinking about positioning. So you generally have a lot more time than you think. And it's the same with Ethereum. I tried to take a long in Ethereum at 2900s. For me, the 2900s was the key level. I've got stopped out of my trade. In fact, I cut it because if you look at this contextually, sorry, Jonathan, I'll be with you in a minute or two. But when you look at this contextually, if I just delete everything on the chart here and remove the trend scanner, from a range perspective, you know, I was very vocal with the fact that I've sold Ethereum at 48s, 49s, and I've also been very vocal with the fact that I've been shorting it, even in the private mentorship that I've been doing. To me, it's a range until it isn't, until proven otherwise. The retest of this high and the rejection, for me, was the sign that, yeah, I have no reason to be bullish, but I'm cautious about the downside because I know historically, when the market has sold off, where does it go to? It goes back to the mean. So I'm at this point, I couldn't tell you whether the market is going to get there. But what I'm telling you is that there's a real risk to the downside here. I don't know what could cause it, but I've got no real reason to be bullish until we find acceptance back above here. For that reason is why I sold my Ethereum. For that reason is why I shorted. Now, in terms of the next key contextual level here was this here. If you look at the market, and again, this is kind of hindsight, but this is exactly what I've talked about time and time again on the timeline, before the market broke down, on the streams, on the Substacks, that look, when you look at Ethereum, what's been the key inflection point in the market? One sell-off, okay? Two sell-off. Again, the market sold off from where? Look at the expansion down. Every time the market has rejected from this level, look at the extension of the candles. That's telling you that there's heavy supply coming into the market every time from this level. Resistance. Resistance again. But look at where the market is selling off from. Resistance again. Okay? Now, the key thing that I iterated was that, and I remember covering this in detail on stream, that as we saw in 2022, look at the market breaking down and then look at the wicks. Okay? This is where you're going to see a lot of people say, fuck bears higher. You've got to buy the dip. Bears don't have a, bears or whatever, right? And the same happened here. It was the same sentiment. Fuck bears. This market's going to go higher. We're not breaking down this level. But look at how many times price wicked this zone and rejected from 42s. Okay, that 42 level is what was key for me in terms of capping price. The minute we traded above it and got back below it, we never found acceptance above that. And at that point, I specifically stated that, look, I think there's real risk that if we start losing this level, we're going to see a move very quickly down to this mid-range. Well, if you understood what I've talked about in terms of the concepts of one-time framing, look at what we've had. One sell-off, backfill, not much. Another aggressive sell-off, not much of a backfill. Now we're into this support zone that I initially wanted to buy. I did long the market from this structure here. And I think what's going to happen, if I was to take a guess, if I was to hazard a guess, I think basically this is just another push lower down before we see some form of acceptance back above either this level here, or show me acceptance or confirmation above this level for a mean reversion trade up into 34s is what I'm thinking. Okay, so it's a case of a range high to this lower bounds of the range. You've got your mid-range above here. You've got your range quarter. You can see exactly why I'm taking it from one level to the next. Okay, nothing more complicated than that. I'm just literally waiting for the price to say to me, all right, aggressive sellers are piling in now. They can't push the market lower down. I think there's a reason to go long. I'm going to start chipping in on the market. Eventually hits my target, or I'm wrong below this level, and we'll probably start trading this range. So notice I'm just taking it from one zone to the next. I'm not talking about I'm bearish here because the moving averages have rolled over. But yes, you have to understand the context, because the context here is telling you that you're pissing against the wind if you're trying to long, okay? The only time I'm going to try and long is when we get a real extensive push away from the moving averages, or a push away from what could potentially be considered as a mean reversion trade. So let's just assume we get one more candle and the moving averages are here. I think there's a good chance that we could revert back up into the bands, okay, before we get a corrected move again. Maybe we build a base, maybe we see continuation lower down, to be confirmed. I don't know the answer to that, okay? So I'm just trying to share with you my thought process. But going back to the original notion of Bitcoin, you look at the weekly, you look at the daily, I just think that you don't want to be fighting the trend. Let it consolidate, let it build some form of structure at some key level, and then we can really start thinking about, all right, how can we now start taking trades in the market for what is developing in front of us, okay? And you can even drop down onto the 4-hour time frame. The set of moving averages that I'm using here is the 1221 EMA. At what point did the 4-hour 1221 cross over? Okay, so I kind of traded against myself here when I took a long from 91. Okay, was it 91? No, it wasn't. Was it? I think it was up here. Sorry, it was 94. Sorry, 94s. Got to 96, straight into the bands, rolled over. Okay, I cut the trade. That was it. Once we got below the yearly caps price, look at the continuation of the trend. So sometimes it's just following the simplest of systems. If you've got a shit system, maybe you don't even have a process or a system at all, use a moving average, use a set of moving averages. It will keep you on the right side of the market until it's time to shift context. Even on the 1 hour, there's nothing in here that is suggesting that, you know, I want to aggressively get long just yet, because every time we've bounced above, rolled over, sell off. Bounce above, roll over, sell off. Okay, same again, bounce above, roll over. Look how short-lived price is above the bands. Every time. That's telling you that there's weakness in the market. Okay? Every single time on the 1 hour, it's very short-lived. Now compare that to an uptrend. Okay? On the uptrend, you're probably going to see the inverse, where it's going to be very, very short-lived momentum in terms of selling opportunities. Once again, look at this. Market long, spends a very shallow amount of time below the bands. The minute it gets back above, flow with the trend, okay? Until you come into high time frame resistance. And that's where those ranges come into play, those high time frame levels. That, look, if this is a range, then what's the key here? Despite the fact that I've shown you that the trend was bullish, okay, at this level here, where's the shift in context? Well, look at this. You've potentially got a 1, okay, 1, 2, 3 drives into the highs. And I can confirm this, looking at the footprints on the order flow, aggressive buying at these highs unable to push price significantly higher. What does price do? It breaks down. Look at the shift in context, okay? Look at the shift in context. Why was this important? Because we're at this key inflection point. So again, when we look at current price action here, I just feel as though we're in no man's land, okay? I can't gauge anything from this level. It's just in midair for me, okay? It's coming to a level of local support, which is this cluster to the right. But other than that, is this level going to stick? Is it going to hold? As a price action trader, you don't know. You can play the probability that it might, but you don't know. But for me personally, I want to incorporate the order flow, and then I'm waiting for the shift in context on the low time frame moving averages to say, okay, this is now setting up for a mean reversion back into the high time frame bands and I'll take profit. All right. So that's kind of my logic of reasoning here from a purely from a trading perspective, not as an investor, but currently as I look at the market, I think we do have quite a bit of structure to build, and that isn't going to happen overnight unless we get a V reversal, which is then, just in my opinion, a mean reversion type of trading. Okay, so you have to understand the structure of price and understand, is this a structural change or is this just a mean reversion trade? Okay.
Yeah, that was great.
No, thank you.
I love that. Very good.
Thank you, Jonathan. Let's move over to, should we shift over to currencies? Just have a quick word on dollar and euro, because I think the dollar is really fascinating where it's coming into. And I know you've got a short position running on euro USD, haven't you?
Yeah, let's see. Yeah, we can definitely take a look at that. But before we do that, I just want to quickly just give a minute or two to Ethereum here, because I was looking at this, and I was looking at this first from the arithmetic chart, and basically looking at this and seeing like, well, it says it's a massive range, but adding the log scale, I kind of get a feeling for the range. It feels like we've been in this massive range since the end of 2021, and from the weekly perspective, this to me at least looks disgusting. Like, honestly, from I don't really know where the trend is, where the move is, whatever. So this to me, when you enter that type of environment, what I'm looking at is I'm thinking mean reversion. You know, when we look at Bitcoin, I'm thinking trend following. When we look at Ethereum, I'm thinking, okay, mean reversion here. So what can be the mean price of this or the range? And what I'm looking at is basically this. And what we have is, I think I have to remove the log. Okay, so this is on the log scale, so you see that it's not completely equal. But what I'm looking at is this. So I think we have this as a range. I'm looking at this as sort of a deviation between range low or below range low, deviation above range high, and then this is a range GQ. If we reclaim this range GQ, then I'm going to be looking at higher levels, maybe up to range high, but we are below range GQ right now. So this is definitely a sign of weakness. And if we go into the daily and we see failure to reclaim this and maybe start moving like this, well, then it's going to be the range lows. So yeah, and then what does this tell us about the overall crypto market? You know, so if Ethereum is going to go down to 2,240, where's Bitcoin going to be? So and I also like what you talked about with Bitcoin. You're looking at the momentum of the current move on the weekly, and that momentum is so strong to the downside that you want to be looking at a clear reversal patterns before you go long. You just want to quickly touch upon that. You mentioned the dollar. Okay, so let's switch over to the Dixie here, the dollar currency index. So basically what we have here on the dollar is a massive uptrend that we've had since the great financial crisis in 2008. There's also, I can't show it now, but there's a lot of seasonality patterns showing that the dollar has, I think it's around September, November, or something like that. I think it's a 80% chance of bouncing. So that adds a little bit of that confidence to potential bounce here. But what I'm looking at is a very big range where eventually I see the dollar trading. Now this is a huge range. We're talking all the way back from back in the 70s. So we're looking at dollar to continue potentially trading within this range and maybe come down to hit the average price or the mean price of this overall range. But before we do that, I do see a significant opportunity of seeing dollar strength, especially if we break above this level. And as you guys know, the dollar currency index, the Dixie, is inversely correlated to Euro USD, because Euro USD is about 60% of the basket of currencies. So if we go to Euro USD, you'll see that long idea will translate into a short idea on Euro. And here's a pretty good explanation of what I talked about in the beginning when I said I'm more of a swing trader, long-term trader. I'm looking for the cyclical moves in the market. So I'm basically looking at the market from the perspective of identifying if we are in a range or an uptrend? And if we're in the range, is that distribution or accumulation? And if we're in a trend, is that a bullish trend or bearish trend? So here we have a clear sign of distribution. We break the lows of the distribution range, and that we are looking at a, over almost 2,000 pips to the downside, a 17% move to the downside. For those of you who are not trading the Forex market, a 17% move to the downside or 2,000 pip move to the downside is insane. That's absolutely insane. We then see what I would view as a fairly short distribution, and then we enter a sideways trending market, most likely based on a shift in the macro regime. We see clear dollar strength through this move into accumulation, strong uptrend, and now I'm viewing this as a potential distribution. And this, of course, aligns with the dollar currency index, because if we add this here and we flip the chart of Euro USD, you will see that it's basically the same chart, right? So I can't trade the Dixie, but I can trade Euro USD, which is basically the same chart. And that's what I'm doing here. So I'm betting on downside on Euro USD. I'm looking at, I just secured this trade. So I've been holding this trade for a week now. Just move my stop down below, above that high. Because if we break that low, I believe we're going to come down to what I believe is the range lows. But if we break above that high, then we probably have a return to the sentiment that we had a couple of months ago, with everyone being super bullish on everything. The AI and everything, everyone just bought everything, invested in everything they could. But I think that's might be a pause on that for the next 2-3 months or so before we go into a full-on bull market again. So that's what I'm looking at here. And also, of course, trading. I'm trading both this on PrimeXBT, both Euro USD and the Bitcoin, as we have. You can actually trade all markets on PrimeXBT. So you got you got shares. You can trade stocks, Bitcoin, crypto, spot, the futures market, and everything. So little.
I was gonna say that's probably one thing I've been playing around with Prime. I don't know if the viewers know, but I think there's been a lot of interest in equities trading. And just to let the viewers know that you can trade equities on PrimeXBT. There's various promo codes flying around. You can use mine if you want. You don't have to. Nobody's obliged to. But you can get a significant discount on trading fees. But I think even off air and even with my own friends, and I've said it in streams as well, that I think I would like to venture more into trading equities in 2026. I think there's a lot of good opportunities there. When I look at the price action there, I really like how clean the price action there is on that side in comparison to how altcoins are. And really, the more markets that you have at your disposal to trade, the more opportunities, or the more better opportunities that you can trade. You're not just forced to trade something like fart coin or shit coin or whatever bloody coin it is that falls flat on its ass every 6 weeks. Whereas in stocks, when the market's bullish, when the regime is bullish, when the Nasdaq is going up and the indices are going up, your Mag 7 are going to perform. Nvidia's been on a relentless run. It's coming off that top. But the point is that, where do you make the most money? You make the most money in a trending market where momentum is trending to the upside. And unfortunately, you've all been in the crypto space for quite some time. And, unless you're in the trenches playing around with $500,000, $1 million shit coins that go to 10, 20 mil, fair play, that's certainly one way of doing it. There's nothing wrong with that. But if you're looking for slightly more liquid plays, it's kind of frustrating in the sense where I've talked about it with Zcash. I've really enjoyed trading Zcash because one, of the momentum to the upside, but two, there's great selling opportunities to short the market because of the liquidity as well. And it's a real shame that the majority of the oil market is just pretty much flat on its ass. I mean, I think I saw somebody in the audience ask me about Solana here. So what's your thoughts on Solana? My thoughts are my thoughts were many weeks ago that it looks shit. It continues to be shit. But it's now coming to a level of interest. Why? Because again, when you look at this from a very simplistic point of view, let's just say high time frame levels. Let me get rid of this. Let's go to the weekly. As far as I'm concerned, when I look at the Solana chart here, it's essentially coming into support. We've had the range highs. Why people were getting bullish here is beyond me. Again, I had my concerns. This is a significant range high into a significant range low. That for me now is where I've been bearish. And now again, like as per the tweet I said, I just don't think the easy shorts are there anymore. We are coming into a level of demand. Whether we break through this remains to be seen. If Bitcoin is going to go to 82s, then I would say there's a good probability that Solana, and I'm still waiting for this to do this actually, I think there's a good possibility that Solana might come out and take out these lows here, okay? Let me just move this slightly lower down. Okay, there's one low, there's another one. If Solana can take out those lows and Bitcoin trades into 84s, I think that gives you a very good setup. For a mean reversion, where? Back into the mid-range. So I'm really looking to take it from, if this is the low in the market, I'm going to hit the right-hand side of the V, okay? The right-hand side of the market, that's the backside, from 125s, and I'm looking to take it to 150s, potentially 160s into this supply zone, okay? That's all I'm looking to do. And so if Bitcoin does push lower down and Ethereum does push lower down for one more leg, then I think there's a good chance that this trade actually sets up. But again, it's one that I'm watching for whoever asks in the audience. But again, when you look at the higher time frame, you look at the trend scanner, it's just been one-way traffic. There's nothing bullish about this, all right? Until we can build some form of base just like we did here, okay? Show me a build of base. Show me that we can trade above the previous low, and show me that we can start shifting structure in terms of local higher high, higher low, local higher high, and then we've got a rotation up, okay? Into the mid of the range. There's a mid, right? Capping price, okay? Support, 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 breaks down. This is the reversion trade that I'm looking for from a long perspective. Why would I want to short into this? No reason to, for me, in my opinion. If you're a day trader or a scalper, fine, go ahead. I'm looking for a rotational play, because we are now at the extremity of this range, and that if there is a level that has to, or is likely to hold, then this is going to be it for me. If we start trading below this, that's the point where, as I said on stream earlier on, that sometimes you can set up for a trade. Okay, so like I said, I'm waiting for price to potentially push into this, and I might take the long here, but if this starts rolling over, I need to get out of the trade. I've got no reason to be a part of this trade anymore, because now the possibility is that we may come down and take out 93s. Okay, so it's not about being, oh, X or you were bearish at those. I'm just telling you objectively that if I'm long the market here and it's breaking down, then I've no reason to be in the trade, because I can always get back into the market. Is if this pushes down, takes out these lows, then comes back up, fine, I'll step back into the trade. Big deal. Okay, just because it broke down doesn't mean I'm bearish. I'm still trying to become a buyer, but I need to see reasoning or a shift of reasoning as to why I want to get long again. Otherwise, I'll probably be looking to long this level here. I'm not looking to short the move down from 110s into 92s. Just how, as price was trending up into 240s, 250s, I wasn't looking to long the level. I'm thinking, right, where can I short this now? Because it's either going to be from this level here, or it's going to be from this level here. It was either this high or this high. Okay, one of these in this zone is my area of interest. Whether it's here, whether it's here, or whether it's here, I couldn't tell you, but I know what I'm looking for when it comes to the market. Now, equally on the downside, it's all right. We've got this zone. I don't know if we're going to come down here and react, whether we're going to go deeper and then consolidate and then react. But I do know that the level of the area that is going to get me potentially back into the market for a long, okay, back up into 150s, 160s. Maybe it doesn't happen anytime soon. Maybe it takes a good 2-3 weeks. But that's kind of how I'm framing these high time frame trades outside of my intraday trading aspects. Sorry, Jonathan, just whilst we're on the dollar as well, I just want to quickly cover the fact that when I look at the dollar here, it is at a key level. I think this is a massive level. If we do start pushing through, then obviously 1 or 2 comes into play. You can see in terms of the daily trend and the daily structure, we are at resistance at this moment in time. So this is just something that I would keep an eye on. There's also, you've got the VIX to look at. There's been quite a spike in volatility today. We're trading up in the 26s. So clearly that's telling you that there's been quite a shift in the market in terms of positioning, in terms of risk off. And again, when you look at the ES and the NQ, that's quite the sell-off today. So do I really want to be knife catching Bitcoin when equities is falling off a cliff from 67s to 65s in a single day or two? Not really. So I'm happy to preserve my cash, my trading account. I'm not looking to short these levels. I just don't have anything actionable as it stands at this moment in time. And sometimes as a trader, it's being able to identify the environment as to where you have an edge. Okay, so I think that's my long ramblings over with. Jonathan, I don't know if you have much more to add. I think the one aspect we were talking about was PrimeXBT and how you can trade CFDs, you can trade FX, you can trade indices now, equity indices as well. So it's a really good platform for me where I'm looking to day trade or run up a small account. It's the ideal platform for me, as opposed to having to wire across money into a brokerage and get set up and all that kind of shit that you have to put up with. So I don't know if are there any final questions in the chat. We'll stick around for 5 more minutes. If there's any questions, please do let me know. For those of you who are interested, sorry, go ahead.
Yeah, sorry, I would love to cover 2 questions here. We have one asking if the spread is good. So right now we have one pip spread on Euro USD, which is amongst the best in the industry. And then we have another question: are the overnight fees and rollover on Prime expensive, or have they cut them? So we have worked on reducing those. So I would definitely say check it out and see the new numbers on that. And we're also giving away all new users that sign up gets a VIP membership for the first 10 days, which gives you 70% off on your trading fees on crypto. And you're also getting 20% discount bonus. I believe EXO, you have a link for that as well. And there's actually no commissions and no fees on the PX Trader platform, which is a platform where you're trading CFDs. So that would be stocks, commodities, indices, Forex, and that sort of thing. So and we also have Metadata 5. So we have all the platforms within the platform. We have Metadata 5 for those of you who are trading Forex with that one as well. And so and industry competitive fees. So check it out. And I would love to hear your feedback on that as well. And we're here helping you out along the ways. We are very big with educational content, making sure that our traders know how to trade and gets the right information. And we try to take care of the trader from sign up to till the end. And if you're a big trader, if you're a trader where you have a good amount of volume, you are going to get a personal VIP client manager where you will get specific market updates and insights from our research team. So we're building something really, really cool here at PrimeXBT, and I'm really looking forward to that.
I've been very impressed with the developments of Prime over the last few years. They really have come on quite well. I think for those of you who want to play around with equities, I think it's a great way to get quick exposure to trading equities. Just play around and get exposure to those markets. If you look at what Nvidia has been doing the last few days, or today, it's sold off drastically, and that's why I've got a small account running on Prime, just to take advantage of, hey, let me just run up a 10K account and see how far I can take it. The last time I did that, the last time I ran up a 10K account was in November 2022 on Prime, where I took a 10K account to 50K in something like 40 days. Nothing degenerate, but because we had so much FX volatility, if you guys remember the UK gilt crisis during that period, that was in February, March, and then obviously prior to that, when the pound fell to, I think it was when the pound fell to 103s, 102s, that was a great opportunity that I longed the market from 103s up to 110, so that was a big trade for me as well. And I just took them on Prime just for the sake of ease, really. Deposit some stable coins, took some trades, and it's a really nice platform. I really do like it. I think Prime is coming a lot, and I'll always continue using it for that reason. The one thing I wanted to also mention is that, again, I'm not, there's been a lot of DMs. I keep getting flooded with DMs with regards to the mentorship. I just want to clarify once again that the mentorship is just basically me running streams now, or I will be running streams twice a week. Positions or spots will be opening from next week. Next Wednesday, I will be hosting another stream, and I will have more details about if you want to join the mentorship, then you absolutely can do. It doesn't cost you anything. It's in partnership with PrimeXBT, which I'll explain, and that will run from December through to the end of March. You'll have access to all my mentorship content, which I did for the charity members. Okay, we raised some good money for charity, which I still need to donate at the end of the mentorship, but I've really gone into depth about creating a trading manual, trading psychology, trading routine and goal setting, risk management, order flow part 2, segment 2, the technicals, AMT, auction market theory, volume profile, market 1 and parts 2, order flow with guest luxury, AMT, trading with footprints. I've still got to finish this off. I'm going to go into strategy creation this week, and then I'm going to go into journaling next week, and that should be the end of the mentorship. But the resources are going to be there. Okay, I didn't charge anybody. It was purely for charity. It was supposed to be a 4-week group. It ended up being 6 months long because I just thought, why not carry on for the sake of it? The resources, obviously, I've shared my ExaCharts resources here, and I'm going to be uploading more worksheets here. So I've got a issue tracker, trading, mindset tracker, mental development, weekly trading routine, daily trading routine, daily market focus list, pre-trade checklist, trade sheets. You can have access to all of them, do whatever you want with it. Maybe open up a paid group and flog it, I don't care. But that's kind of all there. So if you are interested in that, and obviously I run market reviews generally once a week, but from December through to January, it will be twice a week. And I generally try to share actionable trade setups. And not only just trade setups, but trades that I've taken, and explain the thought process, the logic behind them, the reasoning behind them, as opposed to, oh, look, here's a rectangle, it was demand zone, so I bought. It's far more nuanced than that. I cover the order flow, the market profiles, I look at the DOM and the ladder, and I explain the reasoning as to why I took the trade, what I looked for, what I saw. And then I also cover trades that I got wrong, because as part of trading, it's about being a good loser. I'm not going to win every trade. My win rate is 56% at this moment in time. For Q4, my win rate on my intraday account is at 56%. On my slightly higher time frame account is probably 68%. I've got slightly chopped up these last few days, taken one too many trades, so it's probably going to be hovering at 65%. And that's the reality. This game is all about how good of a trader you are, and part of being a good trader means that how exceptionally well do you handle your losses, and you will lose a lot. And part of being a good trader, if you look at some of the best traders in the world, like Christian Kulamagi, who took a $5,000 account to $100 million, I think he said somewhere on his own streams that his win rate is only 25, 26, 27%. If you share that on Twitter, you're going to get laughed at. Oh, look, you've got a shit win rate. Win rate doesn't mean anything. It's all about your expected value behind a trade. So when you start understanding the maths behind trading, the probabilistic ways of thinking of trading as a career, you then start changing your mindset to realizing that, you know what, losing is part of the game. It's making sure that your losses are very, very small and that your wins exceed your losses. Then you've probably got a good chance of becoming a good trader. But apart from that, Jonathan, is there any final words? Thank you for coming on. I don't know if you have any final words, but I think we should call it a wrap on this stream.
Yeah, no, I nothing to add. I mean, great comments there. Really like what you're saying about the idea that win rate is not everything. It's the overall structure and the approach to your trading that matters. I would like to thank you and for inviting me, and thanking everyone for watching. And I do see that you have a very engaged and active community, and really good to be following along here in the chat as well. And yeah. Been a pleasure to be here with you guys today.
No, thank you very much, and thank you everybody for tuning in. If you could kindly just hit the likes, leave a comment, troll me in the comments if you want, whatever you want to do, just anything really. But if you have any questions that I didn't answer, please leave them in the comment section. I'll try to address those on the next video, which is next Wednesday. But apart from that, God bless, take care, and good luck with your trading, and I wish you all the best. Thank you very much for tuning in, everybody. Take care.
Thank you.